All right. Should we get going? What do we think about that time? All right. We will start with kind of our market overview. Um, I think it's important here to start on our weekly chart, really get a context for where we are and what has occurred over the last, month or so, even month and a half, where we're kind of positioned, where we came from, etc., etc. So, if people remember into the spring and early summer, we had our nice June, July, August rally where we put in our yearly high at 46.35. And it took some time to kind of trade down, right? Retest our yearly POC. This is a multi-year POC as well. And then we have spent the last 4 weeks chugging all the way back up. This move is pretty gnarly. To put in context, on our initial breakout after, what was this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, like almost a full year of tests, right? The strength of that breakout um, only put us up, you know, like 8% here, about 3/4 of the way from what we've done in the last 4 weeks. So this move, 400 points, or just over 400 points in 4 weeks, is quite unprecedented. Um, Pretty massive to put in context. Especially after the time and volume spent to get this last little push in the midsummer, as well as the kind of time and volume spent before our lower high that really chucked us right back down. So understand that this move is quite extraordinary, um, that we kind of just experienced over the last 4 weeks, and really put some perspective on that. The next step when we're kind of looking at this is really understanding this area here, right? How many weeks? 1, 2, 3, 4, 5, 6, 7, 8. I'll say 9, 10, 11 even. 11 weeks spent here, and really focus on this structure. So even with 11 weeks, give or take, plus or minus one, whatever, we still have two really distinct nodes and a really distinct low volume node here, right? Which 2 weeks ago, this being the holiday week, so I won't really be paying attention to this candle too much, but we bridged the gap once again, right, from node to node, and did not spend too much in this LVN. Now, granted, a lot of this was fueled off of economic data, but the point still stands that all of this time and volume spent, and with our new structure, we do not have value in this area, right? 4440 and 4500. You guys read the newsletter. Those were our two kind of major levels we were looking at. Once we get down to our hourly chart, we'll go and look at more structure in there. But there's really not a lot of objective value in between those levels. So about 60 points there, and that's still holding true. So I want, like I said, the whole point of this was to understand how much effort it took initially compared to our last move, as well as how much time was spent in this area compared to our single weekly candle. Even this move, that took 1 week, 2 weeks ago, was a 1, 2, 3, 4, 5 week endeavor previously in this area. So moves big, right? Which puts potential on retrace. The last thing I want to talk about on our weekly chart before we go down to our hourly is, and I wrote about this in the newsletter as well quite a bit, is that this is the area we want to look for shorts in, right? Naturally, this is our best R and R for shorts. Now, the problem, and I don't know if I should use the word problem, but I will, is that that's what people thought here, right? And what happened when everyone thought that here? Well, this candle happened, right? This is a lot of our classic kind of fall Christmas rally mixed with positive economic data, mixed with early eager bears, seeing this type of structure, really piling in and getting squeezed. Then FOMO buyers on top, right? This whole move is the perfect storm of, FOMO buyers, window dressing, short squeeze, economic data turning out right. So even though this is the best area to look for shorts right now, and it has been all year, it is also the riskiest, right? Because we've seen what has occurred. So, I wrote about this in the weekly kind of overview in the newsletter as well. I still don't hate longer dated put spreads in here that are really risk controlled. But I implore you guys to wait for larger, more directional plays until we get a move like this, where we look in and then reject, right, and plane this node to this node, instead of really trying to call the top up here, because this can easily put in a higher high. All it takes is one more right thing out of Powell to be said, and one more short squeeze, and we're easily another 100 points up. Now, on that note, once we get honestly above like 4,600, but preferably like 46 or 4586, excuse me, structure up here is really poor, right? We did not spend much time. We did not spend much volume. So we're going to have to really rely on intraday order flow as well as your intraday structure for targets above. We do have a little bit here to look at, but this is 2021 volume can still count. But like I said, this let's see, where is it? The 86, 85, this edge, it gets very kind of sketchy to rely on some of this structure. When we zoom out into our 2-3 year look. This node does still exist. We can still lean on it. But this is much safer. I'll make it clearer here. This kind of area above like 4650, 4660 is a much safer area to look than anything kind of in this zone. Does that make sense? Do we have any questions on kind of this like higher time frame overview, a reminder of where we've been, where we're at, kind of a way to think about it, why I'm making some inferences that I am? This would be a good time to ask questions, if we got any. So, they are still valid. Structure will always be valid, but we have to assume that a lot of these participants who participated into the highs of 2021 are no longer participating or have these positions on, right? It does not mean that they still don't perceive this area as value. It does not mean that we still won't see fresh participants, but we're not going to have a lot of those like position defending mechanics put into place. And we had talked about this down here as well, right? If you go back and read some past things, where when we were testing this area, it was very uncertain, right? Because yes, it's like a 3-year POC, I think. But the idea is from here, we can easily trade here and we can easily trade here, right? So the better long really was in this area. And if we remember, what was it? 43, what is it? 05 was our big level. Like in here, right on the edge. So it's one of those things where we can lean on it, but the retest is going to be a better trade. You might be giving out points, right? But I would rather give up points and be correct than be right, but not have the trade work perfectly or be positioned perfectly. The same idea of like even like intraday today, where I wasn't calling for a short off 70, right? It was back into getting under the 66 half, and that's why in this area where I missed the short was because I wanted to see a strong look in to confirm. So does that clear that up? Do we have any other questions on that? Any other questions pertaining to kind of our weekly chart, where we are, what structure looks like? All right, cool. We'll get down into our hourly chart then. So I'm still running our primary composite. Yeah, go ahead, Sauce. Summary looking at 85 to 02. Yes. Yeah, and even up into the yearly high. I'll get more into specifics when we get into our actual pathing for the week. But yes, into this edge. I think it'll make sense, a better sense, looking at an hourly chart with some more kind of like granular structure. And then if you have questions following and I didn't address, then we can go back to them. But I think it's going to be better. It's the same idea, right? Where overall we have a balanced node with like pretty distinct areas within it. So it's like if we get into the edge, right, it makes sense to trade in, and then we just start looking at our, I'll call them lower time frame nodes, or nodes within balance, right, and then look here, and then reject, and then boo 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 kind of thing. You know what I mean? Um, and we saw that occur earlier, right? Pretty easy structure. But as we get into this edge, right, we want to short the edge, obviously. But we need to see this come down, and I would prefer to take like this type of move into a short, or even a deeper, and play this. Exactly. All right. Like I said, I'll get into this, and if we still have questions, kind of like on levels, we can address them. So one last thing I want to do, just because we got a little sidetracked. So when we zoom over here, remember how this low volume node looks, okay? 4438, 4500, edge to edge, right? And when we see and we look here, this was literally our, what was the CPI move, right, from the Tuesday, where we're getting over this 38 area, right here, and into 45. It is literally like just we moved the low volume node. Right, so structure is still important and pertaining, and these areas still become my main areas to watch. For kind of chart setup here, I do have the larger profile still pulled. I only have it pulled from about July. I don't care too much about this volume that was spent basing around here. I just want to see this high, and then I'm looking at all of the stuff that happened in the late summer to autumn for our overall structure. This I am not too concerned about, but I need to see what's going on above, right? And then for kind of my shorter time frame profile, because of the holiday, I took over a past week, and I wanted to see the post CPI pump, right? So this is pulled from like 10 a.m. on Tuesday the 14th. I really think this is the best way to view this structure up here. We can go into it in a little more detail. I talked to Aram about this today, so there are some notes if you scroll back in chat. But we have a pretty nice triple distribution set up, right? So the look here is for this to hold buyer value, this to hold seller value, and this middle node is our pivot, right? We saw it today, test down, accept it back up, and we get oscillations. If we trade down through reject, right, anywhere in this area, we should be looking to accept into our node below and ultimately trade into 4,500. 4,500 is your major pivot in this area, because under that, we then look back to our 3840 area, right? Retrace the whole move, and we saw that it has substantial higher time frame structure as well over the past 8 months. Okay. Do we have any questions before we kind of get into pathing, kind of expected moves on the structure, why I'm looking and pulling these profiles as they are, how to view them? It's really, I think this is the best way, and it makes it very clear, because like if we lose this node and we lose this node, we're going to trade down into here, right? And if we can accept and hold this node, we can continue to expect oscillations, but ultimately want to peak up. Where do we peak up to? Well, we have structure here, and then we're getting into our yearly highs, right? Any typers, any questions? I will get into pathing if not. Feel free if you have questions to type them and I will address them as we're kind of going through them or as I see fit. I want to start this week with the neutral look because it adds to what I was just saying. So the idea here is to preferably look for an inside week, right? We haven't had an inside week in 6 weeks, 7 weeks. They've all been outsides. So the idea is to hold under the high and hold above the low with 4,500 being the edge. And what that will then do is get tests into this major area and kind of try to build out this edge through 58 to 60 and really smooth this out, right? What will that look like on our lower time frame? Well, it's turning this low volume node, which is right here, to create a more balanced node in this area. The way that I'm going to be looking for this and trading this in terms of two-sided trading this week is if we can hold under, right? We want to see us trade through the node and reject and look down. Once we look down, if we can trade back up through the node, I'm going to be looking back into the pivot, right? So lower distribution, higher distribution once again, and this is our pivot area. This would be pretty constructive for the market and also quite bullish in nature. Like I spoke about with looking for shorts, that this is the area we want to be looking for higher time frame shorts, although it is also the riskiest due to market conditions and the nature of the market right now. Seeing a break of these weekly lows, as well as this 4,500 just in terms of a technical structure, is going to be much better R&R in my opinion. Yes, are you losing some points? Of course, right? But we understand that we have very poor structure below, and even below this, we once again have very poor structure off this initial pump. So missing out on catching this edge and getting a drop for a retest to target back into 4,400 feels safer. And it feels like a much cleaner trade than attempting to short these highs, because we know that bulls are still quite eager and still quite aggressive in nature. So are sellers. So it's just tough, right? It's tough to have a clean read until we see a weekly one time framing up end and we put in an outside week down. We can go from that then to look at our bullish, because this one's going to be not quite as much kind of material. Same idea here. So the main idea is to hold the node right? And push up into our structure above. And then it's just our very basic node oscillation trades, where if we look into the structure, we want to be able to hold our lower edge and then push up for a higher high into this structure. Like I said, a lot of this, there was not much time spent here. So we're going to have to rely a lot on our intraday profile and how our shorter time frame profile adjusts and adapts. You can still lean on these areas. So targeting 85, which we talked about on our higher time frame. Where is it? Right in here. Right, and then targeting 4600, and then naturally the highs. So kind of just stair stepping up. Once we get into this area, once again, you really need to rely on your intraday order flow levels as well as intraday structure to put context on current moves. We talked about the 4500 pivot as well as our smaller time frame kind of central node pivot. And for bulls, I am okay with a pullback down just under 4540, but I need this node to stay buyer value and a really quick trade back up and in. Right? We can think about this type of move, but on a larger scale. Very similar to this, right? We can come down, we can test it, but I want a strong buy up and out. If not, and we start to find sellers here, right, we can just look for those two-sided trades to build this area out. Do we have any questions on kind of the neutral or bullish before we get into the bearish? Did that kind of answer your questions on targets above sauce as well? I'll put the bullish back on really quick. So like you had asked about 85 and 02, right? As higher time frame supply. And the answer is yes. I prefer into kind of like this 02 area to really call it supply. But this structure can definitely act as seller value. It just depends on where new participants are. But you know, here's our 85. We can trade up and hold. We should see up into 4600. And that's why I marked the red box up here. I prefer tests into this area and then selling back down into this structure. Which we can go over to the bearish right now. And that's kind of what I drew here. We'll start without the pathing. This is that look that I literally just described. Right, we're really leaning on this edge as our higher time frame supply. And any test into here, I want to see a brisk, fast trade out and through this structure. Right, the idea here is to get this last kind of bullish hurrah and then trap all of these fresh bulls, push down, and then stop trigger and get into this structure. Does that make sense? Up here. So the main thing is if we get a look up into here, can we hold this edge? Right? If yes, we should look back up. If no, we want to see a trade through structure and into pivot. Yep, exactly. Yeah. Yep, either works. You got the idea. Talked about it a little bit as well. So for the bearish pathing, same kind of idea as the bullish pathing, where instead of holding our upper node for bullish, we want to see this pivot get taken out and trade back down into. We don't, on the both the bullish and the bearish, we don't want to see this LVN filled in. Right? We want two very distinct areas of value and to sit in them. I really see like a push, some excitement in the order book, some aggressiveness, something that entraps people who are like, well, it can't go any lower or it can't go any higher, right? Those type of traders, and really exploit them to find some liquidity to look. Versus if we just build in this, it's going to be slow, and I will be more two-sided trading than directional. Now, just the basic pathing, like I said, we want to look out of this upper node as soon as possible, and we'll look back down into this area of buyer value. I wrote in the newsletter, the idea here is we want to excite, and this goes into what I just talked about, but we want to excite buyers in the zone again, but have sellers really drop this offer and turn this edge into strong seller value once again, and then blow these guys out. We can lean a little bit in the 70 to 80 area to expect some participants just based on getting into kind of our primary edge of this low volume node. But that's not going to do our full structural pair from the CPI print, right? We saw this earlier in the year on, what cell was it? It might have been in here where we had a gap to fill, the roll gap. Yeah, no, it was here. Right, where we start to get some of these bounces kind of in the gap, but ultimately filled structure, right? So a very similar kind of like look in, bounce, but then get our repair. So you can go review that if you want some more context. Oops. And the primary kind of look is down into our 3840 through the LVN. And then at that point, we should look for acceptance back into this node and do our node plays, right? Who the hell knows what's going to happen down here? But that's kind of the main bearish look, right? Can sellers reestablish this whole area as seller value and bring us back down into this area of more extreme consolidation and clean up this poor low ultimately? Still have a VPOC here to test as well. Okay. Any questions, comments, concerns? Do people have different reads? Do people have the same reads? Are things confusing? I really think pulling this like pro CPI profile can show some better structure. And we just rely this on seller value and this buyer value and this pivot until proven otherwise. Going once, going twice. Bueller, Bueller, Bueller. All right. That is kind of the overall market view.